Hello, I'm here today with Aaron Marsh from Marsh Lending. He's here to talk to us about interest rates on investment property loans. Aaron, go ahead and take it away.
Hey Andrew, how's it going? Hey, we're here on a summer vacation at our family house on Mystic River, right on the Mystic um, waterways. We can see all the boats coming and going. There's a really great drawbridge right over here that is just excellent people watching and boat watching. But again, thanks for letting me dial in for today's episode. Really, what we're going to talk about today is what do I mean when I say in all of the previous episodes, marry the property, date the rate, right? Um, Specifically, what we're getting at is if you fall in love with a place, right, you want to first make sure the property is correct for you, make sure it fits all the needs that you're looking for. If it's going to be a short term rental, make sure that it has the rental income that you're looking for. It's in the desired location, has the great amenities that go along with it. And as you continue to watch our episodes with Andrew and myself, you'll start to see some of those great properties that fit all those, right? It just checks all the boxes. Check, 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 check. And um, and so then what do we talk about, when we say marry the property? That property may not be there for very long, right? So as you try to think about, okay, how am I going to finance this? How are we going to afford this? What are all the aspects that go into care management of the property? What does a rental income look like? How much does that cover? And so as you kind of get into that, you can tend to get into analysis paralysis, right? So you can overanalyze everything. And then when you layer in on top of that all of the rate changes and everything that's going on with the Fed today in terms of like you constantly hearing about rate increases, or there may be proposed rate increases, or it may be a slight decrease by a 16th of a point or an eighth of a point, and then it goes back up again. So all of that stuff can cause inactivity and cause you not to get the house. And so when I say marry the house, if that's the house that you're looking for and that's the property that checks all those boxes that we talked about, or you feel like on your internal scorecard, it fits all my needs and it's something that I really want, then we want to make sure that you get into that house and you get that. So marry the house, fall in love, get the house, date the rate. Rates and mortgages can be refinanced, especially everything that I do. So the stuff that I do, we can refinance those if the market changes in a way that you feel fits um, your needs, or it hits the rate that you're looking for. Hey, I want to refinance into this. So we were at a certain rate. Now market conditions have changed, and now we can do this. So we can always be flexible in terms of getting you in and out of a new mortgage in terms of a rate that you like, right? So, but don't get so hung up on rates. And what I mean is don't get hung up on it to the point where it causes you to miss out on a great property, because someone will come in right behind you. They'll either pay all cash, or they understand the rate game and they want to get the property, so they'll get in at the current rates, and then they'll make adjustments where they need to make sure that thing cash flows out for them. And specifically, here's kind of an example to think about. So let's say you found that great house, it's right near the beach, or it's on the beach, and it's $1 million even. So you have your $250,000 down payment, you're ready to go. You've checked all the boxes, so the rental income will hit the interest payment on the property insurance, the HOAs or condo fees, and if there are any, and then also it'll hit your property taxes. And if those come out to an equal 1-to-1 ratio, then yeah, it qualifies a loan, and we move on and we get to closing, and now you're in this property and you're ready to go forward. So $1 million property, $250,000 down payment, $750,000 loan. How do rates come into that play? So if you had it at an 8% rate, which is kind of a current rate right now for the no income qualifying loans that we're doing. So if you're at 8%, but you're like, 8%, I don't know about that. I think they're going to come down because I'm such a good market guesser. I'm going to guess that they're going to come down. And I think they're going to come down by half a point. Well, I want your email address so then I can get in the same game as you and I can guess rates, and then I'll be super rich just like you, right? So none of us are all great at the guessing the rate game. But let's say you want it and you're going to hold out for it, and it drops a quarter of a point. So that $5,000 a month interest payment now becomes $46.88 on that $750,000 loan. What have you done? Effectively, you've changed your payment by $312 a month. But you've waited on that rate to get to that point, and you may have missed out on the house that was your dream house. And how does that equate out? So let's just average it on a 31 or a 30-day month, and that's about $10 a day. So if you're renting this house, you could adjust your rental rates by $10 in that day, and it significantly cuts out effectively that 25 or that quarter point drop in rate. So you've effectively mitigated out the risk. You still got the property that you wanted. You may have got in at 8%, and hang on, we'll be okay with that 8%. And then when market economy or economics shift into our favor, then we'll change it. Okay, we can refinance this one. But if you really think it's going to go down by a quarter of a point on a month is around $312, $315 for the whole month. Let's call it $10 and change, depending on the month, per day. And is that enough to put you at risk of missing out on your dream property that you know that you'll get great rental income? It has all the amenities that you're looking for, and it's something that you worked with Andrew on trying to find, and you spent hours in the car, and you've looked at tens of properties and hundreds of them online. And when it comes down to it, we want to make sure that you get in there, because that property is really the thing that's going to happen for you, right? That's the thing that you're going to get that organic appreciation. And so let's say you lock it in. It's at current rates today at 8%. We get you in the place. All your bills are being met with your rental income. Then you start to reap the real benefits, which is the organic appreciation over time that your renters are kind of paying your way to make that happen, right? So you're getting that rental income each month that's taking care of everything, and then you're at the end of the year you're seeing that organic appreciation. It's appreciated by this much, and then it's appreciated by that much, and then they start to compound on each other, and then it appreciates by this much, and really what you've done is you've locked in and got the property that you're looking for, and you've mitigated the risk if you can pass that $10 a day or $15 a day in your rental ask, right? Or, okay, hey, here's my rental fee for this, and you're going to be here for a week, and it's going to be like a $70 or $75 difference. As long as it's not out of the realm of you capturing that market to rent your house for their vacation home with their family, then you've effectively mitigated that risk. And so you weren't playing chase the rate, right? So people who play chase the rate tend to be latecomers to the party. They tend not to get the property that they want. It's not the property that they were looking at, or the subset of properties that they were looking at. And it's all because they're really getting into a bunch of analysis paralysis by waiting on rates. And then again, let's say rates hold steady and they don't go down for the whole year, like you may be wishfully thinking that they might do. Then you've missed out on an entire year of organic appreciation, rental income, and having the house that you really want or you really desire. So when I say marry the property, that's really what I mean. I mean, really lock in on that property that you're looking for. And when I say date the rate, that's really what that means. It's kind of, we're going to use the rate as we are now, and you can do the math and you say, okay, it's going to cost me a difference of this much per month, $300, $400 a month, because I really think rates in my heart should really be here, but current market, they're here, right? Well, don't let that little piece be the huge difference maker, because when you break it down on a per day rental analysis, you can kind of start to look at it and say, okay, this makes sense, right? We can get into this. It's a $10 a day difference over the course of the year. It's somewhere between, $3,000, $4,000, depending on the rate fluctuations. And we're talking about a significant rate fluctuation. We're talking about going down a quarter of a point. For that to happen in a short period of time, that may be wishful thinking on our part, right? So again, I encourage you, work with Andrew, find the property that you're looking for, narrow it down, really make sure it checks all the boxes that you're looking for, and then, come to me and we'll work on getting you into that property with no income documentation, no W-2s, no tax returns. Um, we can write it in your name personally, or we can write it in an LLC. That's up to you, however you want to do that. But again, really feel great about the property, and not as much about the rates, because the rates are what the rates are. We don't control that, right? But we do control our ability to help you get into that property, and we can open up to your eyes, what does it take from a down payment standpoint, and then once we've cleared that hurdle, what does rental income look like to offset maybe these rates that I'm thinking that may fluctuate, right? So with that, I'll turn it back over to Andrew. You can always contact me directly if you have any questions, or if you want to explore this further. You can watch some of our other videos. They're really great to kind of get a handle on what does it mean to get in the investment housing game. And that's really what we want. We want you to be in the investment housing game. All right. So take care. Thanks again, Andrew. And we'll talk again next week.